Just give me 2 minutes. Give me 2 minutes to set this up. 2 minutes and we're starting. All right. Well, good morning, Checkmate crew. It is Sunday today, one day before the market opens for the week. It is 9 o'clock in the morning, Sunday morning, March 26, 2023. I've been having some erratic schedules. I am going out of town for the next 2 weeks. I am going to ETH Rio and Brazil. And I'll be also going around South America as well for the next 2 weeks. So I'm not sure how reliable my internet connection is going to be. I will try to at least do a broadcast once or twice while I'm there. But that might not be possible, especially if the internet connection is bad. So at least I'll still try to stay on Discord. I know I'll have a cell phone connection, so I'll still stay on Discord and I'll still post trades if they happen on my mobile app. But as far as these market memos, it may be very condensed if I do one. So I just wanted to give you guys that update. But before I leave, I actually leave on the plane in the next couple of hours. But before I leave, I just wanted to give you guys an update of what's going on. Let's actually talk about the environment here. Let's talk about our market internals first. So I think that's very important to look at, especially since the markets are just going back and forth in this crazy range. And it's easy to lose sight of what's going on, especially if we zoom in too much on the charts and we don't zoom out and take a look at the data, for example. So first off, let's take a look at our junk bonds advanced decline line. So our junk bonds advanced decline line has been stabilizing. We were looking for 4 days in a row of advances over declines. We had 3 on Tuesday, Wednesday, Thursday of advances over declines, and on Friday, boom, we got a negative. However, a lot of people some people, I don't know, expressed a little bit of, I guess, fear because of this fourth day, because we didn't get the fourth day in a row. But let's just keep things in perspective here. Right now, the junk bonds ADL line is stabilizing. So for the past week or so, it's been kind of flat because of all the advances that happened last week. So overall, for the past week or two, it's been flat. So back in late, we've actually seen the decline of our junk bonds ADL line starting on February 8th. That's when we had the first 4 days in a row after this kind of rally in the junk bonds ADL line. So starting from February 8th, we had 4 days in a row of negatives, and then we started going down in a downtrend again. And so it's almost like the junk bonds market participants kind of saw this coming with this bank run fiasco about 1 month ahead of time. It's funny how that happens. Usually the junk bond, the bond market participants usually see these things coming way ahead of time. And so that was kind of our warning then. Do we know that it's going to be a big risk event whenever the junk bonds ADL lines turns down? No, we don't know that at the time that it happens. But, it's just very curious to see that this line actually started turning down about a month before all that, Silicon Valley Bank and Signature Bank closings. But anyway, it flattened out around the end of February. And then when all that news came out, that sentiment shock came out about those banks, it started going back down again. So in that similar fashion, right now we're kind of flattening out. Does it flatten out and then continue down again? Or does it flatten and then start a shorter term, mid-term, long, a trend change? I don't know, but I think in the next week or two, it will show us, okay? In the next week or two, if it loses, this area right here, if it loses this level, then I suspect that we're probably going to see a bigger correction in the market. If this kind of flattens out and starts giving us, 4 advances in a row and it starts trending upward, then, we could start seeing some choppier markets, possibly even a trend reversal in the market. So I think in the next week or two, it's going to tell us kind of the flavor of the market for the next month or so. So I think in the next week or two, we'll have some clarity on what our shorter term trading strategy will be. But until then, I'm just going to hold tight with the positions that I have so far. So that's the junk bonds advanced decline line. And if we look at some of the other market internals, this is our New York Stock Exchange high-low line. Our New York Stock Exchange high-low line is actually, we're right at those levels where it could be making a higher low. If it wants to make a higher low, it's going to have to do it really quickly. But on Friday, though, it actually accelerated to the downside. So I'm not sure if we're going to get that higher low. We may actually end up getting a, it may be something that, technically, I guess it could, at this rate, the rate at which it's been falling, this could still fall for another week or two and still create that that higher low. So this could still go down for another 2 weeks and still create that higher low. So again, this is a very slow indicator. That's why the quality is so good. It doesn't give out a lot of signals, but when it does give a signal, it's very, very good signals. So I'm just waiting for this line to curl up and our junk bonds ADL to curl up, and that will show us that that shorter, at least in the shorter term, the liquidity conditions are improving. But until we see that, we may be seeing some volatility in the markets, just continued volatility. And it's been kind of like this since the beginning and mid of February. If we actually take a look at SPX, it's been like that since February 8th. We've been just seeing this choppy market. Really from there to where we are now, we're only down, let's say, about 200 points out of 4,200. So it's less than 5%. So, a 5% correction is nothing. It used to be back in the 90s and early 2000s, we used to have like 10+% corrections multiple times in a year before the QE era. So I wouldn't say that this is a deep pullback. It's less than 5%. So it's still, I would say this is just range. It's just range chopping. Okay. because the junk bonds ADL line really isn't free falling. It really isn't. Surprisingly, with this sentiment shock with the banks, I would have thought that this was going to tank, but that didn't happen really. It's like a slow drift, and then it kind of flattened out, and another slow little drift downward, and now it's already flattening out again. So I actually think of this as being it's quite resilient for the type of news that we're getting. So this is one of the data points on why I don't think that this these bank runs are going to be that big. I mean, I've been telling you guys for weeks. I think this is way overblown. This is kind of an overreaction. Not only is the junk bonds market telling us this, but if you just look at the data of each of these banks that failed, SVB, the Silicon Valley Bank, Signature Bank, all these banks that closed down had assets to cover all of their deposits. Even that one crypto bank that failed, Silvergate, they voluntarily closed down. They even had all their assets. They voluntarily closed down, and they gave all the depositors their funds back. So all these banks are well capitalized. Yes, they are taking on losses because they have all these bonds on their books, these treasury bonds, and yeah, interest rates went up, so their treasury bonds are, a little bit underwater, but they do have assets. They still have plenty of assets. It's not like as if they have all these bad debts that they can't collect on and all of a sudden they're insolvent. It's not the case. So I think, again, this kind of sentiment shock is a little bit overblown, and the data says that not only in the balance sheets but also in what the junk bond market participants are, how they're trading. Also, it's kind of showing us that this is not really that big of an issue, because if it really were a serious banking crisis, this line would have tanked like it did in 2008. It would have just tanked, and that is not the case. If we actually look at 2008, I showed you guys this chart before, but if you look at 2008, look at this. See, this is the type of junk bonds ADL action that happens during like a banking crisis, and we're just not seeing that. Look at this. It went from 2000, all the way down to like 7,000. Okay, it more than halved, in a 4 or 5 month period. I mean, these were steep drops. Okay, and again, we are just not seeing that. All right, it's just not happening. So, I know that over the weekend and the end of the week, there was some news about Deutsche Bank. Everybody's being scared about Deutsche Bank. And I told you about Deutsche Bank actually before last week. It seems like everybody wants to talk about it now. Some of their credit default swaps are being traded like as if there's going to be some type of problem with Deutsche Bank. I will say this though, I don't know if Deutsche Bank is going to fail or not. I don't think anybody knows that for sure. Okay, I don't see it happening soon. It may happen down the road later on, but if Deutsche Bank does fail, that would be a big problem. Okay, Credit Suisse not so much, because they don't have that much. A lot of banks do not have that much derivative exposure to Credit Suisse, but Deutsche Bank, they do a lot of derivatives business, and they are a counterparty to a lot of these OTC, over-the-counter derivatives trades. And they're not very open about who and what type of exposure they have on their derivatives. So if there's a huge unwind because Deutsche Bank fails, that could be a huge issue. Okay. Now, are they going to fail or not? I don't think anybody knows. I don't think they're going to fail this round. Okay. And again, that's just from looking at their balance sheet. But then again, they aren't known to be the most upfront about their finances. So we shall see what happens. But if Deutsche Bank does fail, that could be a problem. Okay, I'm not saying that it will, but I'm just saying if it happens, watch out, because that will be a huge global sentiment shock. Okay, I do think though that we're going to get out of this pretty soon. I just don't see a big problem happening. Again, the junk bond traders are not really trading like as if there's going to be a big, huge systemic risk. So I just don't see it happening this round. Although, when we get into an insult, remember, we had our thesis, end of 2023 to beginning of 2024, we're going to see some type of solvency crisis starting in the emerging market area. I do think, though, that, I am now right now looking for overseas banks that have higher exposure to commercial real estate, and also commercial loans. So any bank that's got large exposure to a commercial loan portfolio or to commercial real estate loan portfolio, I'm looking to short those. And I think towards the end of the year, we're going to have some really great opportunities to short. If you guys know of any stocks that are like that, send it my way and I'll take a look at their balance sheets and see which one is going to be the best candidate for us to short. So that's what I see. But until then, we could still see a mini bull market. I still do think that. I think after maybe after the volatility, after the debt ceiling raising, I think we might see 3 to 5 months of a mini bull market, a rolling bull market, so to speak. And those are common. I mean, if you look at back in the 70s and 80s, we had 1 or 2 year periods in between this longer secular bear market where we had these mini bull markets. And I think that's very possible here, maybe 3 to 5 months. But around October, November of 2023, that's when I think real problems could surface. And again, we'll take it with the with precautions here and wait for the data to turn before we start making moves on that. Let's also talk about crypto. A lot of people have been asking me to cover crypto in the next market memo. So ask and ye shall receive. So let's actually talk about crypto right now. It's about $11.3 billion in Bitcoin open interest. So it's been climbing and it's maintained that. So it's actually close to, I think, the highs ever. If Deribit will just update its open interest numbers, which it hasn't. I don't know why it's doing that, but this is where they put the chart of the open interest. It looked like it was making highs around this 11 billion mark. If we look at Ethereum, it's not quite there yet. I remember back right before the merge of September 2022, we had 8 billion, remember 7.9 to 8 billion in notional value for open interest. So, in Ethereum, we're not seeing that as much, but in Bitcoin, we're seeing huge participation in the options market. And a lot of that has been call buying. Remember, in the past couple of weeks, I've been covering this. It's been mostly call buying. And so right now, I think it's worth looking at the Bitcoin price action. If we actually take a look at, is this Bitcoin? Yes, it is. This is Bitcoin right now. If we look at the block trades, there has been some bigger block trades here. We're looking at the 30,000 calls for end of May. These are the May contracts. Of course, these are both sells. So somebody is selling the May 23rd, 30,000 calls. So I think a lot of, that's the Mays. I don't see any March 31st sells that were big, but most of them are in May so far. If we look at Ethereum, I think I just checked about an hour ago. There were some block trades. Let me just take a look here. Yes, there's some block trades here. These look like more like spreads. Here is a buy, sell right here on December 29th contracts, 2,200 buys, 1,800 sells. So this is a call credit spread. So somebody shorting volatility and having a slight bearish, a slightly bearish position on the price of Ethereum. 255.13 right here is also a spread. Wow, that's a 3-leg spread right here. Buy. What is this? 2,400 calls, 2,100 calls, and 2,000 calls. 2,000 strike calls. Buy. And another buy right there too. So that's like a combo buying. That's a pretty interesting trade right there too. One of the things I wanted to go over was also the gammas. If you actually look at the gamma exposures right now, remember how we saw all those 3,000, those 30,000 calls being bought for the end of May contract? So that would be this right here. So they're buying. Somebody is buying. So that is the negative delta, negative gamma exposure See that right there? That's the negative gamma. Well, okay, fine. Let's take them all off, so it's easier to see. So remember, we saw all that end of May call buying. So that end of May call buying for the market maker, that's a short for them. There's a short on those calls. So we're seeing that negative gamma exposure happening here at the 30,000 mark for the May 26th expiration. But most of the OI is actually in the end of March contract, which actually is it expires at the end of this week, and we actually see a lot of that negative delta happening around here, 27,000. I think this is where a lot of people bought their calls, and right here too, 27 and 28,000. I think right now I believe Bitcoin is right above the 28th. No, it's right there. It's at 28,000. Okay, so we are at those short gamma levels. And as you can see here, most of the OI, like I said, is in calls, and it's in this March 31st expiration. If we see, all right, I think if we see it bust out of this 28,000 range, we're going to 30,000. Okay, we're going to 30,000. If it busts out at 28,000 on, by tomorrow, Monday or Tuesday, I think we bust up and then we start floating toward the 30,000 mark, because that's where all the positive gamma is. And we probably end up sitting around there. From 28,000 to 30,000, it's going to be a quick move. It'll be the market makers, covering or perish. So they have all these short calls. They'll probably cover really quickly, and then it'll cover and make the price go up all the way to 30,000 or so. If we are to drop from these levels because of this negative gamma, it's going to have to happen soon. Okay, so as we get closer and closer to expiration, that delta and gamma risk becomes too much for the market makers, and they will have to cover or perish. So it's only got like maybe a couple of days for this to come back down to more safer levels for the market maker, for them to not have to cover these short calls on their books. So in the next couple of days, if it doesn't happen, if the price keeps drifting up, we're going straight to 30,000, and we'll probably get pinned there until the 31st. At least that's what the market positioning, that's what the options positioning looks like for Bitcoin. If we look at Ethereum, I actually haven't looked at Ethereum like in this manner, just because the OIs are just not as high. But you know what? We might as well do this exercise with Ethereum and see if it follows that kind of pattern as well too on here. Do we see a lot of short gamma? Let's see here. That's May. Yeah, we actually kind of see a similar structure. We're right at that little bit short of that 1800 strike. We're a little bit short of that 1800 strike. So that would be right here. So, okay, so yeah, we got two big negative deltas, and then we got a bigger positive delta here at 1900, although it's just not as big. So this one may not be as precise as Bitcoin's, but it does appear as if there's a little bit of a similar structure, at least in the options positioning, as the March 31st looks like it's got the biggest kind of gamma exposure levels, and it looks like we're already past the first big negative gamma strike. We're kind of right there in the second one, and so if in the next couple of days nothing happens, then this could definitely push up to around 1900 to 2000, and maybe we might get pinned there until the 31st of this month. Very possible, but I think in the end, most of that is going to come. Most of that options kind of price action and matching the options market, I think, is going to come from the Bitcoin market, just because the OIs are the open interest is just much larger on Bitcoin right now. So I think the precision will mostly come from the Bitcoin side than on the ETH side. So that's enough about crypto, okay? So I know a lot of you guys follow this and are trading crypto options. That is my take on what's going on. I think for Bitcoin, we can definitely see some of that options market is pulling and pushing the actual spot prices. Next, S&P 500, again, internals. The internals are stabilizing. Let's see what happens in the next couple of days. I think then whatever happens to the junk bonds ADL line for the next week or two will probably tell us what the flavor of the market is going forward for the next month or so. If we look at the VIX just has been out of control. It's been kind of crazy, and every day it just makes these huge pop ups and down, up and down. So that's kind of a crazy one to look at. Now, if you've been tracking VIX on a intraday basis, it's been, I mean, some of these moves, I mean, if you're able to catch these moves, you're buying puts right here when VIX starts coming up intraday, and then, selling puts as VIX coming down. I mean, that has been a very good move. And the VIX has been actually pretty good on an intraday basis, showing that if you thought VIX was making big moves, VIX 9-day is also making huge moves, even bigger moves. And really the short-term, all that short-term hedging has really exploded. In all these weeklies, you're seeing just huge amounts of weeklies being used, daily hedging happening by the institutions. And so I think it may even be better just to monitor the VIX 9-day now going forward. VIX 9-day minus VIX also, I've been using that as well too. And as we see this go negative, or usually when this is really positive like this, that's usually when we start seeing, bigger corrections to the downside in the S&P 500. As we get actually negative on the VIX 9-day minus VIX, the market will start calming down, okay? Because then we have more quote-unquote normal markets where there's more fear dated out. There's more uncertainty for something that happens 30 days out than 9 days out, which is what normally how the market behaves in a normal stable market. So we are starting to get into, we closed actually in the negatives. So let's see what happens next week. I think that if this VIX 9-day minus VIX, if it starts trending downward, we might actually start seeing the S&P 500 stabilize as well too. Speaking of market internals and everything too, I also want to go over kind of who is actually making money in this market. And right now, if we look at the growth to value chart, I mean, the growth to value chart has just swung upward. And again, a lot of this has to do with our, the chart of the day that I told you guys probably for the last few weeks. I've been mentioning TNX, the 10-year Treasury, as this dips down, as this keeps going down and down, growth becomes more favored. Okay, growth stocks are just favoring this. So if the 10-year collapses like this is just like, this is a sugar high for the NASDAQ. So we've been seeing the NASDAQ really outperforming the S&P 500 and all the other indices, especially the Dow. The Dow is mostly in value industrial names. So if you look at the NASDAQ since, all this banking fiasco on March 8th or so, I mean, we're way above, okay? But if you actually look at the Dow Jones Industrial Average, or, we could use DIA, which is the ETF that tracks that. As you can see, it has not been the same story since March 8th, since that sentiment shock, since pretty much 10-year Treasury rates have dropped, and so we've just been seeing this asset rotation away from value and going into growth. Again, IVW, IVE is just pointed upward and still going upward. But, however, it's interesting to note that on Friday, IVW IVE did make an outside day down, which is the start. It could be the potential start of a trend reversal. It could be, all right? It's usually with the outside day down, usually what chartists say is that when this goes down and then we close underneath the lows of the outside day down, we see the markets, we see the chart, going back down and free falling from there, which actually we actually saw this in this chart not too long ago. Oh, right here. right here was the last time we saw a big outside day down on August. We had an outside day down, boom, boom, boom. We go below the lows of here, and then it just free falls, okay? That's how an outside day down works. Here's another outside day down. Does that happen? I mean, I wouldn't mind that. You know, in our 10K challenge account right now, we got MOS and we got Chevron. MOS is just like languishing right now. I don't know what is going on here. I still believe in my thesis. I still think within that this year at some point, there's going to be some sort of reckoning in the potash market and in the fertilizer markets. That data is still there. Right now, I'm kind of surprised that none of the other market participants are seeing that. So the data is not showing me that I'm wrong about this, but in the end, price action is king. So if this keeps going down, we may have to just stop out of this. But I don't know if this is just because of sentiment shock, if it's just technically broken, and then it'll just fix itself over time and then come back. I don't know, but right now I'm just staying put. I realize that the drawdown is a little bit hefty right now, mostly coming from MOS, but I still have my convictions. If we look at corn markets right now, corn actually reversed a lot of its losses in the last couple of weeks. Remember, we got into the corn spread right here on this day, remember, on beginning of March. And then because it closed down under it, we stopped out of it. Now it's actually back. If we had kept it, we'd actually be in the profit right now. But, shoulda, woulda, coulda. It is what it is. That's just part of trading. Sometimes it happens. They say that if you're actually managing risk correctly, about a third of the time you get stopped out, it would have been better if you had just stayed in. But the 2/3 of the time, that's what you're trying to protect yourself from. So, it is what it is. I mean, corn is coming up like this. And if corn just shoots up like that, that means our thesis, at least the corn market is following along with our thesis. Let's see what happens. Usually the commodity moves first, and then we see Mosaic move up. We'll see. It is kind of painful to hold on to this, but I am holding on to this. CVX, on the other hand, has reversed most of its losses in the past. So our CVX holding is not doing as badly. We were able to catch it somewhat closer to the lows, so that's good. As we can see, CVX reversed a lot of its losses on Friday and went up and positive, so that's a good sign. Now here's the thing, let's actually take a look at the crude oil market. So crude oil market, I mean I don't know what to say about the White House right now. I don't want to get political about this, but it's just been amateur hour here at the White House. In the middle of last week, there was a White House spokesperson that said that they would be buying crude oil for the strategic reserve at $68. Then on Thursday, they come out with a different spokesperson comes out and says, no, they will not be buying crude oil for the strategic reserve in all of 2023. So I don't know what kind of mixed messaging that is. So we saw that. We saw the markets rally because of this buying at 68, and then it just tanked when the news came out that they're not going to be buying for 2023, and then we're just now we're here. So it's been a pretty interesting media roller coaster ride when it comes to crude oil, at least from here in the United States standpoint. But let's cut that noise out and let's just take a look at some of the other data points that we use. I like to use gasoline futures and crack spreads to see, is it economically viable for the oil refiners to keep buying crude oil? And so right now, as we can see here, if we look at gasoline futures, it's actually been in a daily uptrend since around, let's say, December. Okay, if we look at crude oil, all right, and crude oil, and if we look since December, it's actually been, you could say it's flat to down, right? Flat to down. We're actually lower than where we were in December. But in gasoline, we're in an uptrend. So what does that mean? That means the crack spread is widening. Okay, that means it's more, the margins are better to buy crude oil and sell gasoline, okay, or distillates. So I think if this still maintains that uptrend, and if we break out of these highs, I think then we're going to see a huge rally happening in crude oil. But I think this has to really make that higher high. If for some reason we start a downtrend in gasoline, that's not going to be good. That won't be good for Chevron and other, other oil stocks. But I have a feeling that this is going to keep going up, and especially since we're getting closer and closer to the summer driving months. That's usually seasonally when we start seeing strength in the gasoline markets. Okay, we're only like a couple months away, so we could chop around maybe in a box for a couple of months and then break out. So I don't think it's going to break out like soon, but I think it has a chance of maybe consolidating here and then breaking out in the summer months, and that's going to take crude oil up with it. At least that's the thesis for now. Okay. Since we're looking at energy, we might as well look at nat gas as well too. Nat gas is trying to make this higher low on a daily basis, on a weekly basis. On a weekly basis, it actually made a lower low. So I guess if you are bullish on nat gas, you're going to more focus on the daily chart. That is interesting. Okay, so we might, is this going to really flatten out and keep going upward and make a higher high? That would start a new trend. That would make this a higher low and a higher high. Not sure, but again, the thesis here is that a lot of I think for this to really make that higher high and break out, I think the market is going to have to see the shortage of potash fertilizers. Okay, I think that's going to be the catalyst for this to go up. And as the data says, like, it should happen sometime around the harvest time. It should happen. Actually, I thought for a brief minute there, I thought the market was going to notice that around planting season around here. So apparently that's not the case. I mean, it still could. I guess in the next 2 weeks, the market could notice that, but we'll see. I still see a shortage coming up in potash. So then, people are going to go toward urea-based fertilizers, and then that's when nat gas is going to get bid up. And I think sometime this summer we're going to see a bidding war between China and Europe for nat gas. I think this is the commodity to really be in, at least in the short term. Long term, you guys know we're in uranium. Quad U, I mean, Quad U has not been doing very well, but most uranium names have not. URA, URNM, all these ETFs that track uranium have not been doing very well. CCJ, we had a member ask about CCJ. I just don't like CCJ just because they have a little bit more debt. Quad U doesn't have any debt because they paid it all off back in 2020 or 2021, and then they sold a recent property so that they don't have to dilute their shares. So I am more bullish on that just because of the balance sheet. However, having said that, the rest of the metals market really hasn't been this way. Uranium right now, I think, is tracking more the energy markets. If we look at precious metals like, GDX and stuff, GDX miners, they actually have been in an uptrend recently. GDX, SILJ, should have gone into these, shoulda, woulda, coulda, but it is what it is. If the dollar goes up, though, I don't know. I think they could still come down, or if yields spike, which I think yields will spike sometime around April. I think then we could see this correct a little bit further. In hindsight, though, it kind of looks like we should have got in at 9:30, does it not? I don't like to focus on that because it's really bad mindset. But UUUU, Quad U, definitely this is not tracking the precious metals. This is definitely more correlated to the energy markets. If we pull up a chart here, let me actually try to pull up a chart of UUUU right here, right now. And then let's take one of these and let's put crude oil, CL1. Oops, is it like that? All. Yes. Yeah. So as you can see here, it's more correlated to energy markets than it is to precious metals. You know, all these uranium stocks. So I think this is a lot of sentiment shock with the banks, you know, and a lot of this, I mean, yeah, the market conditions were weakening around the February 8th, but I think after February 9th, so these huge drawdowns, I think this was all sentiment based. So as oil comes back up, will this come back up too? I think so. So I'm not too afraid about this one. We have been collecting premium on this, although we're a little bit under break even after all the premium selling. On the next rise up, you know, it may be worth selling some covered calls again. I'm still going to wait for my levels to sell those covered calls just because the IV is really not that high. But if we get into the 9s and 10s, I'm going to be selling at the money calls and buying some puts for protection. But again, that's a ways away. But uranium names can move quite quickly if the underlying energy markets start tightening up as well. So that's what I'm looking at here, okay? Any questions, comments, rude remarks? Anything else you guys want to look at? I see some people are actually joining us from YouTube and Twitch. I see you guys. I see some people viewing us. So thank you for being here on such short notice, especially on a weekend. I do appreciate that. I don't see anybody typing or asking me for questions, so let's wrap it up right here. Again, I'm gonna try to be on, you know, the next couple of days. I don't know how reliable my internet's gonna be in South America, but whenever I do have a stable internet connection that's fast enough to stream all this stuff, I will definitely try and do another market memo. Of course, I'll have my cell phone. I have my mobile app, so I can trade on my mobile app too. So if I make any trades or anything like that, I'll always post that on the Discord. Our Discord invitation link is in the video description below. Come join our Discord. Be part of our growing community. There's no sub fees. There's no paywalls. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right? So, again, follow us on Discord. You get all the live updates. It's a lot easier to update that. Even with a bad signal, I'm still able to usually send a message out on Discord. Again, if I have a stable internet connection that's good enough, I will try to also post another video as well too. Have a great week, guys. Stay safe, all right? And we'll talk real soon. Have a great day.